Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host. Well, I'm gonna make it pretty quick today because I'm still fighting this tickle in my throat, and I could get into a coughing attack, and I don't want to do that here on our program. So I'm gonna try to keep it pretty short. This is my second attempt, actually. That's why I'm on the Japanese yen. So let's just start with the Japanese yen. We see here that it's in this trading range. It broke out of the trading range. And once something breaks out of a trading range, it usually will go on to make higher highs. So it could be that the yen pulls back into the trading range a little bit, but quickly goes on to higher highs. The Japanese central bank, they are devaluing the yen by printing more yen, by doing their own kind of quantitative easing. And everything that's bought in yen is more expensive, and that includes stocks. So real estate, stocks, anything that you can own in yen will go up in value as a function of yen. That's how inflation works. If you look at the United Kingdom, we had, let me back up. We've been looking at this pretty much a channel here that goes back to 2011. The UK has broken out of this channel back here on the week of September 22nd, and we kind of slice down to here. It looks like we're kind of chopping our way back up. Probably won't make it all the way back up to the underside of the channel. Probably roll over at some point, continue lower. Let's look at the U.S. market, S&P 500. S&P 500 had a down week, albeit very small. So really just a breather. I mean, if you look at, one of the things that I'm looking at is these thrusts are getting smaller. So this is a very healthy kind of a pullback right here that we had. Pulled down way low to support and then closed higher. And then this is what we call a hammer. We've talked about that. And so a break above the high of the hammer is a good entry. Of course, there's a lot of reward to risk here because this moved pretty substantially from here to here. That's almost 300 points on the S&P 500. So that's a good reward to risk, as opposed to here we kind of chop down, and you'd have to pick an entry here. Let's say you got in right here. The risk reward here is not as great, right? I mean, you're looking at maybe the market going up to there. So you're looking at 2050 to 2150. That's only 100 points. So these thrusts are getting smaller. I suspect it's harder and harder for participants to make money in these moves, and so to me it looks like a tiring kind of effect in the market. Now, if you look at volatility, we've been talking about this trend line in volatility, and we've had now our second breach of this green trend line. The first one was here back on December 1st, the week of December 1st, where we closed on that Friday below this trend line. And then last week we closed below this trend line as well. So, it's not likely that volatility is going to stay down for very long, but you could get something. Let's just talk about what we could get. There's a couple of different scenarios here. I think the most likely scenario is that we get some sort of something that looks like this, with maybe something that has a little bit of a tail that doesn't quite breach this low here. It doesn't breach that low, but you get a tail, and then the following week we get something, that looks like so, and then volatility starts making its way back up. I think that's a pretty likely scenario. You can see here we didn't even get, the last time this happened, we didn't get a tail or anything like that. It gapped up and then just went up. So, and that could happen. The only reason I don't think it'll happen is I think the market wants to go a little higher into that resistance zone that we showed on the S&P 500. And as long as as long as we got that resistance up there, it's likely the market will try to challenge that. And if that's the case, then volatility should go even a little bit lower than it did this past week. Let's look at the Euro US dollar. The Euro US dollar continues to fall. It's been falling here since May, and it's looking now like it wants to go lower. You can see the euro. It's 5:30 p.m. Central Standard Time, and you can see the euro is actually live right now. So you can see it moving. Tell you what, let's put it on like a 60-day chart, and so there you can see the euro moving. So 111.70 right now, and the euro. I don't know. It looks like it wants to go lower maybe before it bounces. It could make a low down here around 110 and then bounce, but it's got to bounce in its future. It's just a question of how long do you want to stay in it before you see the bounce. But it's got you don't have a move. Moves like this don't last forever. They tend to bounce and go the other way in usually a pretty violent manner, and it doesn't look like that's going to happen today. So I would say the euro is probably going to go a little lower. Probably take out this previous low. Zoom in here a little bit. Probably take out this previous low right here. Maybe come down to this area and then bounce. So we'll see what happens there. Whatever happens, it's because the big money guys are in there making it happen. It's not because me and you are deciding to do something in the euro. Switch to Ninja Trader and look at oil. So this looks like a very, what's interesting is the sell-off in the euro goes back to like May, so that'd be like right around in here. But the sell-off in oil looks like it started more in September. So it almost looks like the euro is kind of leading the oil market. And so if that's the case, then I would say that oil, and we don't know if it is, but the charts kind of tell us that it is. But if that's the case, I would say oil is going to make a new low, maybe just slightly lower, and then rally pretty hard, probably up into this 57 area, 57.50, and it's going to be interesting. Oil is going to be really interesting to listen to the media about oil because when it starts to rally, people they're just going to be talking all about the media. Oh, the oil sell-off is over. It's time to get back in energy stock. Blah 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 blah. And about that time, you'll see this thing roll over again. I mean, it's not through going down. Even if we see this move here pretty quickly, it's going to chop its way up into here, this 70 to 75 area, and maybe 80. And you're going to hear all kinds of noise about how the sell-off in oil is over. And then about that time, you're going to see a pretty dramatic sell-off and then, new lows somewhere out here. So don't get too excited about energy stocks just yet. There'll be a time to get excited about energy stocks. It's not right now. And it won't be until after we get a new low, after we see the 70 to 80 area, and then get a new low after that. Gold, we had this downtrend line in gold, and we talked about how when these trend lines are broken as a market's trying to bottom here, so you can see it kind of went up, came back down, made a new low. Okay, so we're still below the trend line, and then bounced above the trend line and pulled back. Now, in MT Predictor here, we got this thing kind of rolling over a little bit, so it could be that maybe gold goes like this and then comes down, but it should make a higher high. It should be higher than this high. So you could look to buy gold as it pulls back even lower, somewhere here on this trend line, and then if it takes out this low, then you just get out. You just say, that's not the right time to buy gold. But we should have a bounce here in our future for gold. And we did have this final kind of sell-off into this low here. And so we should be getting some sort of bounce that would take us up into this 1500 area. That's what I'm looking for to happen. I haven't bought any gold yet. I'm still kind of waiting to see. I like to wait to see the market quit going down before I buy it or sell it. So just to be clear, because that's probably not clear. What I like to do is, let's say this is last week, okay? So let's fast forward to the end of this coming week. Let's say we got a candle that looked something like this. With a little tail here, a little tail there. Then I would be a buyer of gold at that point, because this close is above this high, and this is the low, the previous low. So then I would be a buyer of gold. Buy. That's how I look at getting into a market. So I like to see it stop going down. I like to see buyers come in and take out the most recent low. If they can take out the most recent low, even if it pulls back, even if the next week it comes down and looks like this, I'm still in, okay? Because what's likely to happen is I'm going to get let me delete some of this stuff. Let's say it comes down like so and doesn't make a new low, but it sells off after this close above this high. What's likely to happen is you're probably going to see maybe a gap up, tail, and then somewhere in here you'll see a really big candle like this, and then like this, and then like this, and they just get bigger and bigger like that. And then when you start seeing little ones like this, and flat lines like so with tails on them, things like that, then it's probably time to start taking some off again. But this is the key area right here, right in here, what we're looking for. And I'll point this out again. This won't be the last time I point this out. Let's look at oil. The DAX. The DAX looks really strong. We had this pretty normal looking pullback here. You've seen this pattern many times before. It's kind of an ABC pullback, and then it took out. And I think this trade signal was about, the target on it was about here. So it went right through that target and just kept on going. So the DAX looks really strong. There's also quite a bit of strength here on the MT Predictor strength indicator. You can see the strength band is here, and you can see that these bars are above that. So anytime that happens, it's been my experience, the market, it may pull back a little bit and chop, but then it's going to make a higher high. This is not the high, not when you have this strength band like this. What else do we have? We can go back here and look at the dollar. The dollar, well, here, let's get the big picture first. The dollar came down, chopped. Now we're at this resistance area that we've had on here for a while. And, I think last time we talked about, what it might look like with the dollar pulling back. This looks pretty normal. Get something that looks like this. So you might see the dollar pull back into this area and then break out of this resistance zone to the upside, something like that. So look for the dollar to pull back into this 93 area, and then we should see the dollar resume its uptrend, and it's going to create all kinds of havoc in the market. People are going to be freaked out about this, so just beware now. What else can we look at? We can look at natural gas. Natural gas is an important commodity. If you guys are buying electricity and you're about to renew a new contract, um, I would suggest that you lock in your prices right about now. Because what we've got here is we've got a pretty normal looking pullback, okay, to a low. We got a takeoff, so the market kind of moved out to an intermediate high, and it's pulled back. Looks like it's going to pull back to a higher low. And we've talked about this before, but if this is the first move off the low and this is the first pullback, then this next move is going to be significant. So you can lock in your electricity. Go ahead and do that. That'll save you some money over the next year or so. Because once this moves, this will probably take out this old high. And there's a big difference between $15.50 natural gas and $2.72 natural gas. So if anybody's got any other markets, I know there was a gentleman there in the UK who was trying to get us to look at the UK markets, and I just don't have a good way of looking at the FTSE except through these iShares that are, where's the UK? Here it is right here. The UK EWU, it's an iShare type instrument that's an ETF that's traded in the US. These are the types of things I have access to. I could not find the actual index for the FTSE in either Thinkorswim or in NinjaTrader. So that just means that I would have to buy data from somebody else other than who I'm buying data from. And it's not likely that's going to happen because it costs, every month to buy the data. So anyway, but if there are any other markets or if there are any particular stocks, let me know, and I'll be happy to talk about those. A lot of people want to talk about Apple, AAPL, and I typed in the wrong symbol rather. Apple looks really strong. It's got earnings coming up in third week in April, and until Apple breaks this trend line right here, there's probably not much to do in Apple, so except continue to buy it. Apple will have a pullback eventually. Now, one thing to note here, I do see something that's kind of interesting. There's a slight divergence. You can see the stock's getting higher and higher. See, it goes up, down, goes up to a higher high. But look down here. At this high, at this high, you have the RSI at this level, and then you've got a new high, right? And the RSI is lower. So this is what we call a bearish divergence. This means that the internal, there's some negative momentum internally to Apple that's not showing up in the price action. This is very common in stocks and in the index. It's something you can look at to try to give you some bias. So if you're a buyer of Apple and you see something like this happen, you might try to sell some calls above the market, like to say 140, with the expectation that this is going to pull back to the trend line. You buy the calls back, and then your stock continues to go higher. We might do some of that. What we'll do, I'll tell you what we'll do. The SPY, I don't know how many of you know about the SPY, but the SPY tracks the S&P 500. Okay? Now, what I'm expecting to happen in the S&P 500, or in this case the SPY, is maybe a slight pullback and then, take out the old high here, and try to get into this 215 area. What we'll do next week, if that happens, what we'll do is we'll sell some calls above the market. So what we'll do is we'll sell we won't buy the stock because we don't want to buy it high like this, but what we'll do is we'll trade something called a vertical. And that's just selling a call. So you would sell this call This call would be for sell. Whoops. I'm trying to put S there. S. Okay. And this call, this strike right here would be a buy. We would buy this one. And our risk is the difference between these two strikes. So, for example, we could buy, in this case, let's say the market trades up here. We would buy, let's say, the 217 and sell the 218. Okay? And maybe we get, I don't know, 35 cents for that option. And of course, since we're selling something, we're obligated, if it closes inside of here, we're obligated to pay as much as 65 cents. So you're making 35 cents, but you're risking 65 cents. Now, that may sound strange to some of you, but this is selling premium is a very profitable way of managing the market. Now, if the market pulls back down into this area, anywhere down here around 200, we'll come back and we'll buy the SPY, and next time we'll just sell the calls, and that's called selling covered calls. And I'll teach y'all a little bit about that if you don't know anything about it. If there's anything else anybody wants to know about, just put it in the comments section. Comment on the show, and we can talk a little bit about it. It doesn't necessarily have to be something that I like doing. If it's something you're interested in or the community is interested in, we can do it here, and maybe everybody can learn a little something. All right, we'll continue to forward the link to your friends and family. You can follow me at Twitter. A lot of times and I apologize, I haven't figured out the thumbnail. I've changed computers here recently, and my thumbnail is not showing up, so you might have to be a little bit more vigilant when you're looking for the program. I don't know why that thumbnail is not coming up. I'm going to try to investigate it, see if I can fix it this time. But my point was, a lot of times after I record the show, I'll post it on Twitter too, for those that follow on Twitter. Okay? Well, thanks everybody for coming in this week. Really enjoyed it. And the markets, I think, are getting kind of sleepy, but then they don't stay sleepy for long, so it usually means there's something afoot. So we'll keep an eye on it, and our whole goal here is to try to stay. It's hard to stay ahead of it, but if you don't get more than a step or two behind it, I think you're better off than getting 20 or 30 steps behind it. So we'll continue to do that. All right, everybody. Thanks a lot. We'll see you next week. Goodbye.